Be greedy when others are fearful. So those are the words from Warren Buffett. And today in the market for these 5 stocks, there is extreme fear. And so the question is today, so should you buy these stocks? Are these the best opportunities of the year, or are these value traps in those falling knives? So being a contrarian isn't just buying the dip, but knowing which dip to buy. I'm Mehdi from Tokyo Alpha Mind, and today in this video, we are going to see which of these 5 is a life-changing bargains and which are value traps. So let's get started. So the first stock we're going to discuss today is UnitedHealth Group, ticker symbol UNH. And so this stock is down more than 60% from its all-time highs, and investors in this stock cannot catch a break. So after the murder of one of the CEOs, the DOJ investigation for billing fraud, like the resignation of one of the CEO as well, and actually higher than expected medical expenses across the whole health insurance industry. So basically this stock has been battered down by investors and by analysts. We have seen downgrades after downgrades, and so it has been the typical definition of a falling knife in the past few months. So the right question today is is it a buy now at $237? So it's a tough question, but definitely what we can say is that this should be temporary headwinds for UnitedHealth Group. Well, first, the DOJ investigation. So they have been cooperating with the DOJ, so trying to actually get some kind of compromise or agreement. And so this should actually be lifted in the coming months. Then in terms of their business in the industry, so what's going to happen is that in 2026, the whole of the players in the industry, they are going to reprice their plans. And what we are going to see is that much higher prices for all health plans in the US. And so what we can expect is a return to higher margins for players like UnitedHealth Group. And so definitely what we can expect from UnitedHealth Group is that they are going to recover in terms of EPS. And given the figures today, what you should be focused on is what is going to be the EPS in 2026 and 2027. So we've seen that in this industry, so UnitedHealth Group has had a margin or operating margin of around 6%. So this is quite the norm in the industry, and this is what we could actually expect. So 5 to 6% margin for UNH in 26 and 27. And so applying that to their expected revenue of around 500 billion, so what we can expect is that at least $25 EPS going forward, especially if we applied as well an increase in terms of share buybacks. And so also if we apply to this $25 or $30 EPS for the stocks, a 15 or 17 multiple. So you see that we can get a target price of around 400, 450 very easily. And if we are more bullish, I think that we can go beyond 500. So I think that this has been a falling knife in the past few months, but at these prices, it is an incredible opportunity, at least in my opinion. It's not financial advice. Do your own due diligence, and you will understand that there is opportunity in this stock. The second on the list is PayPal. So PayPal has been falling very hard from their all-time highs in 2021, 2022, and is now sitting around $70 per share. And so this has been more than 50%, more than 60% actually downfall from their all-time highs. And a lot of investors are wondering, is PayPal going to recover soon? So the first thing we have to keep in mind is that during this era of the 2021-2022, PayPal was way overvalued. It was seen like an ever-growing company. And so that's why it reached levels of $300, for example. And so I think it is quite unrealistic for an investor today to expect the stock to actually go back to all-time highs in the next few years. Having said that, we have seen a very good management change at PayPal, so with the arrival of Alex Chriss, and definitely there is a change of strategy. So when we were before having growth at all costs from PayPal, so now we have profitable growth and a focus on getting more and more profitable for PayPal, and also buying back more shares. And so what we're going to see is that actually a slow recovery from PayPal. So today it's sitting around $60, $70 per share, but in the next 5 years, we can definitely expect PayPal to actually go beyond the $100, $140 per share, and targeting a double actually from PayPal. So I know that PayPal has been kind of a loser stock in the past few months or even in the past few years, but it still has a lot of potential. And I think that it's not a value trap at the moment. It will continue to actually grow profitably and focusing on delivering return to shareholders. And on top of that, the focus in terms of business on small enterprises, in terms of payments. So we will see that actually PayPal is still going to be relevant in the coming years. So it's not a dying business. And I think it's a very strong position that you can have in your portfolio. Next one on the list is Alibaba. So I've been talking about Alibaba extensively. So Alibaba has actually been one of the core victims of the Chinese bear market. And since 2021, so it went from $300 to now $100. But we've seen like a bottom at $62. And so we've seen quite a recovery already in Alibaba. But my take is that this is not over. So Alibaba is actually a fantastic opportunity for all investors, even though that it has been retraced more than 60% from its all-time high. So definitely in the next few years, what we can expect from Alibaba is to return to at least the $300 mark. And why is that? So we've seen the results from big tech in the US in terms of AI. But a thing that a lot of people are actually forgetting about Alibaba is that Alibaba is one of the leaders in terms of AI in China, and they are going to benefit tremendously from that. So in the past few months, Alibaba has been deploying a lot of different Qwen models, and we've seen that they have been the best models in terms of open source models. And so what we can expect is a reacceleration from the cloud business for Alibaba, and definitely increase in terms of profitability for Alibaba, and also a resurgence in terms of enthusiasm from investors into this name. And so on top of that, we can also expect like a rebalancing from the US to Chinese stock markets. And with this double punch, I would say that we can definitely expect that Alibaba can return to the $200 marks. So this is why I think that Alibaba at this level, around $110, $120, still remains one of the best opportunities in the market. And so definitely not a value trap and something that you should check out much more deeply. Not financial advice, but on my side, I really like the stock. Then we have LVMH. So this stock is also down 50% from its all-time highs. And being an European stock, it is not well known from American investors, but still a powerhouse in terms of luxury, and everybody knows their brands. So like Louis Vuitton, Dior, for example. But the thing is that in the past few years or in the past few months, like we've seen a lot of headwinds for LVMH. And so basically today, the stock has been battered down, especially coming from a very huge slowdown. So in China for luxury goods, so it doesn't apply only to LVMH, but there have been a lot of headwinds. So first, as I say, like in terms of growth, deceleration in key markets like the US and China, but also like they are kind of being in the middle of a trade war, so between Europe and the US, for example. So definitely growth is going to suffer. And we have seen that there are different types of luxury in the market, and companies like Hermes, for example, have been much more resilient to this type of headwinds. And so LVMH is actually today in quite a tough position, but this is still a resilient company, and they're going to continue to grow, definitely. They have been doing that for quite many years, but I think that the recovery is going to be slow, not as fast as what one could expect. So we should not expect LVMH to return to all-time high in the next 1 or 2 years. But on the long term, this is still a very great company, quality company, and I think that this could be a core position in your portfolio if you're interested in this type of quality company. The only thing is that we should not be caught into the hype, being that quality companies are a buy at any price. So we've seen that with LVMH, because at $900, people thought it was unstoppable. But today at $450, no one wants to buy the stock. So there will be cyclical in the industry, or there will be cycle in this industry. And what we can expect is that they're going to grow, but much more slowly. The recovery is going to be a little bit slow, but definitely, I think that long term is still going to be a winner in the market. So if you're interested in this company, you can have a look. On my side, I think there are better opportunities today in the market, but it's still a great company. And then we have Tesla. So Tesla is down from its all-time high at around $400. And so what we've seen today, that a lot of investors are kind of caught between the car business and the robotics business and the robotaxi business. So basically, Tesla valuation and Tesla stock price relies mainly on what's going to happen in the future. But if we look first at the car business, yes, Tesla is definitely a trap because this business does not deserve the valuation it has today. So we've seen decelerating growth, even like basically decline in terms of business for Tesla, with a lot of competition from like new car makers, but also Chinese car makers. And so definitely this is a very tough business, especially in today's market. And also we've seen that they've lost some kind of subsidies. We've seen a lot of controversies around Elon Musk. So really a tough environment for Tesla. And I think that their car business is not going to actually grow going forward, and we'll have a lot of pressure in terms of margin. But if you're interested into the robotics business, so yes, Tesla can be a good opportunity. I think there are a lot of risks, and you should be careful going into Tesla at the very moment, because we could definitely see back the $200 level, or even worse if a lot of things are not materializing in the future. So always a lot of hope in the stock, but I don't think that Tesla is one of the best opportunities at the market at the moment, even though it has a lot of expectations going forward. 5 stocks down big from their all-time highs. So UNH, PayPal, Alibaba, LVMH, and Tesla. So should you buy these stocks? UNH, very strong opportunity with a return to normalized margin in 2026 and 2027. PayPal is going to recover with a focus on profitable growth. Alibaba is going to become a #1 player in terms of AI in China, so the best opportunity in the market. LVMH is going to recover, but a little bit slowly. And Tesla, well, it has a lot of difficulty in terms of the car market, but if the robotics business can actually take over the world, this could be also a big opportunity. So if you're also interested in other analysis and deep dive like this one, so please check my other videos. Please subscribe, and I see you in another one. Bye.